Hello everyone, and welcome to this When to Sell webinar. My name is Erica Reisman, and I'm the Director of Education here at Stock Rover. And also with me is Howard Reisman. He's the co-founder and CEO, and he'll be answering your questions at the end after the demo. You can download the PowerPoint presentation that I'll be using in PDF format by going to this link here. And I also sent the presentation out in an email to anyone that had registered as of about an hour ago. Today we're going to go over a few different features in Stock Rover that you can use to perform some common selling strategies. I will primarily be focusing on fundamental style investing, though we'll point out where you can use technicals in your analysis as well. Of course, every investor has different needs, and so there is no way to give blanket advice about why or when you should sell, but this webinar is meant to show you that by utilizing several of our features, that Stock Rover can aid in those decisions. I will be showing some premium features, but I'll let you know which ones those are. So I'll start with a brief PowerPoint, and then I'll switch over to the product, and then we'll end with the Q&A. If you have any questions as I go along, please type them into the question box, and we'll get to them at the end. There are more slides on the handout than I'll go over on my screen. I'm going to switch to the demo after slide 9, but then the rest of the slides will be the notes for the demo that I'll be doing in Stock Rover. Lastly, we are recording this session, so if you have to leave early, don't worry. I'll send out the link when we have it up on the website, probably within the next day or two. So let's get started. Just a brief disclaimer, this presentation is meant for instructional purposes only, and it does not constitute financial advice. Always do your own research before buying or selling stocks. So there's a lot of advice out there about the buy price, but not quite as much about the sell price. And so if you are choosing to sell your stocks, the buy price isn't the only thing that matters. You could have entered this stock here, but that doesn't matter so much if you're still holding on to it down here. So generally it's been shown that people have a harder time committing to selling than they do to committing to buying a stock, and I believe it's largely because it's a more emotional decision. So here are just a couple of the reasons as to why that might be the case. It goes against the human tendency to be greedy. We don't want to admit defeat. We have anchoring bias. So essentially this means that we anchor our decisions to something that actually doesn't really matter. So in this case, the buy price should probably be irrelevant when considering selling for investment purposes, like if you're replacing it with a better stock. But we have the buy price in our head and kind of often let it influence our decisions when really it shouldn't have that much sway. We can also have a tendency to become sentimental about or loyal to a stock that's been good to us. So if we've made a lot of money off a stock, but then it starts to be rocky, we might want to hold on or feel like we owe it something. We also don't like losing money or feeling regret. And we can also just feel familiar with the stocks that we do own. So we're just comfortable with the way that they move, and we don't want to have to sell it and then learn a whole new stock that we might not understand as well. And finally, we might also play the what if game. You know, what if it rallies and I make all this money? So that's also a tendency. But to combat this emotional response to selling, it's important to come up with rules. So for example, having a hard price target or a fundamentals-based rule about when you're going to sell. And if you do this, it means that emotions won't enter into the equation. You can just rely on data and analysis. And ideally, you should have a rule for every stock that you own, and you should create the rule when you buy the stock, so you're not kind of making it up as you go along, because at that point, your emotions are already going to come into play. Also, you don't need to look for the absolute bottom and the absolute top, just relative values. Almost no one is able to buy it at rock bottom and sell when it's at its absolute peak, and you don't need to do that to make money. You just need to sell it when it's higher than when you bought it. Some more general tips and strategies. It's important to learn from your mistakes. So you can study your own method in order to improve, and I'll show you how you can do that with Stock Rover. And you can also reframe the experience. So basically, any selling that earns money means that you made money. So that's a good thing. And even if you lose money, that can be okay if you learn something from it, so you can save more money in the future by not making those same mistakes. And it can also reduce your tax liability by offsetting gains from elsewhere. So I think it's important not to kind of just go on tilt if you lose money. So just before I go on to different reasons that investors might sell, I mentioned this before, but investing goals vary for each investor, and so the selling rules will vary, obviously. So some investors buy with the intention of never selling, whereas some are kind of day traders and are in and out very quickly, and most investors probably fall between these two styles. This webinar is meant to show you how you can perform some common selling strategies with Stock Rover. And if I haven't mentioned one that you like, send it in. We always like to hear how our users are using Stock Rover. So here are some common reasons to sell, and I'm going to go over them and also where you can find them in Stock Rover. And then in the demo, I'll go over these examples. So first is just if you made an analytical mistake right off the bat, you should probably reevaluate the sale and even sell at a loss because that the whole foundation of the sale was kind of premised on something incorrect. You could also sell if there's been rapid price appreciation. So if you've bought a stock and it just has this huge rally, you could just sell and lock in those gains. And for that, you could use the chart in Stock Rover. You could use our technicals, and you could use our alerts. You could also sell for valuation. So if the valuation isn't justified by the price, that could be a reason to sell. So for that, you could look at the peers tab so you can see how it's valued against its peers, or you could look at its own historical valuation in the chart and the table, or the financials if you want to analyze the business and see if you think it's worth its current price. You could also sell for deteriorating fundamentals. So if the core business is weakening, that would be a reason to sell. And for that, you can use the chart to chart the fundamentals, the table, or again, the financial statements. You can also sell for opportunity cost. So if your stock's doing okay, but it looks like there's another stock that would kind of fit the same niche that's doing better, you could sell so you could enter in a position for that stock. And you can also sell for rebalancing. So for that, we have a sector allocation pie chart. And you can also use our portfolio modeling facility to model hypothetical trades so you can see how to balance your portfolio. Just a couple more. You could sell for diversification. So if you have a bunch of stocks that are highly correlated, then if one takes a downturn, it's likely that they all will. So you can use the correlation feature in Stock Rover to make sure that your stocks in your portfolio are not highly correlated. And then you could also sell if there's been a management change. So if you're worried about where a new CEO will take the company, and you'd probably find that in the news tab or in the financial statements, and likewise for a change in the business or competitive position. So if the business is pivoting or if they're kind of losing market share. And then also if there's a change in the regulatory environment that it could affect the business, that would also be a reason to think about selling. So you can use probably the news and financial statements for that. So this is where I'm going to switch over to the product, and you can keep on using this presentation in the notes to follow along. So I think you should all see that now. And in the handout are also links to webinars and other resources that I may mention along the way. In this demo, I'll primarily be working with this sample dividend portfolio. So there are a few shortcuts in Stock Rover where you can find out what the analysts think. So if you don't want to do your own in-depth research but just want to trust the professionals, there's a couple different places that you can see that. So the first is if you go to the Insight panel on the right and click the Detail tab. And I'm just going to make it a bit wider. And then I'm going to click the Analyst Estimates. And here you can see the earnings and revenue estimates as well as the EPS trends and revisions over the past 90 days. And I find this really useful. So for bigger stocks, so Aetna is really big. There's 20 to 16 analysts that are, looks like, following this. And I like to look at the EPS trends and revisions. So basically you can see the average EPS estimate for this quarter and next quarter, and then this year and next year. And then you can see how those have changed over the past 7, 30, 60, and 90 days. And if you want to sum up this whole table, I kind of like to look at this bottom right number, which right now is negative 0.6%. And this is the estimate for EPS next year versus the estimate 90 days ago. And you can see that it's been revised downwards. So and it looks like that also happened mainly within the past week. So generally revisions downwards are a bad sign, as they often beget more revisions downwards. So this means that the analysts are a little worried about the business next year for the stock, so I might be a bit worried as well. So that's one with a negative revision, but if I go to another stock like UNP, you can see that's actually been revised upwards in the past 90 days. So analysts are getting more positive on this stock. So this is just a really useful, the whole table is really useful, so you can kind of see how analysts have been thinking about this stock over the past 90 days. But you can also look at this in the table if you'd like. So I'll just drag this back. And then I'll go to the growth tab. And here I've added in this EPS next year estimate trends column. And I did that just by going to add column. And if you just type in estimate, you can see a couple of the other metrics we have. So there's the graphical ones are the ones with this icon on the right. But basically there's the current quarter estimate trend, current year estimate trend, next year estimate trend, and next quarter estimate trend. But I'm just going to work with this one here. And you can sort by this, so you can see it's actually already sorted if I just click the column header. And then if I mouse over, I can see this little tooltip comes up with the actual revisions. So here I can see that Honeywell has had the most negative revision against 90 days ago. It's been revised downwards by 1%. And then Omnicom has also been revised downwards, as has Aetna, Starbucks, and JP Morgan. And then there's VF, which is the same, but I'll just focus on these 5 right now. And if I want, I can just kind of flag them by holding down Shift and selecting them all, and then right-clicking, going to color, and selecting yellow. And so now as I continue my research about when to sell, I can also just mentally know which one of these were kind of flagged by the analysts for poor performance in the next year. So it's just a useful way to keep track of them. So you can also look at the Morningstar grades in the Summary tab. So if I go to Summary, you can see that there's just these growth, profitability, and financial health grades. And so I have selected Aetna, and you can see that it's got a B for a growth grade. And if I mouse over, it can tell me what that means. This little tooltip is saying that based on historical sales growth and year-by-year sales growth over the past 5 years and its growth trend, it's been rated a B. So you can just kind of see what Morningstar generally thinks about this company without having to dig into all the data yourself. There is also a grades view if you scroll the view tabs and click grades. And then here you can see those same grades, financial health, profitability, and growth for Morningstar, but now you can see them for all of the stocks, and you can of course also click to sort. And you can also see the sector grade. So this is basically not only how Honeywell is doing, or whatever you're looking at, is doing versus just in general, but also versus other stocks in its sector and its industry. And you can also expand these rows to see how they've been doing over time. So have they been getting better or worse? So those are just a couple of shortcuts that you can use if you just want to see how the analysts are feeling about your stock. So next I'll go over what to do if there's been price appreciation or depreciation. And for that I'll go back to the Portfolio Performance tab. And I've added in this target price column, which is editable, so I can type in something. So if you are the kind of investor that likes to have hard and fast rules about certain prices when you'll sell, the target price could be really useful. So if I look at Aetna, it's at 85.93 right now, but say when I had bought it, or based on recent research, I've decided that I want to sell it when it's at 90, I can just type that in. And then now I can, whenever I look at my portfolio and I have the target price, I can always see how close it is to that. And there's actually another really useful metric called the price to target percent, and this is the percentage change needed for the holding to hit its target price. And when I select that, you can see that it automatically calculates that I would need a 4.8% appreciation in order to hit my target price. You can also use alerts, and so this is where you would get an email or text alert when there's various like price changes or volume changes. So this is kind of like taking the target price one step further, where you actually get notified when something happens. So alerts are a premium feature, but we will be opening it up to all users in the next month or so. So stay tuned for that. We'll announce it in our newsletters and on our social. So to go to the alerts facility, you click the alerts in the top right. And then it'll prompt me with this create alerts, and I can choose to set a ticker alert or a portfolio or watch list alert, and I'll do that afterwards. But for now, I can just type in Aetna, and then I can just add in an alert for when it exceeds 90. $90. And when I do that, I can also select to do a text alert. If I'd like, you'd have to set up your phone number, obviously, but I'll just keep it as an email alert. And I can also set an alert to sell it if it falls below a certain amount. So say when I bought the stock, I decided I didn't want to lose more than 10% on it, so I would just sell it 10% below. So for now, I'll just put in 75. So now I have two alerts set for Aetna when it reaches above 90 or when it falls below 75. And there's a whole bunch of other alerts that you can set, but I'll just keep it for these now. And there are links to the help pages in the handout. But I would click Save Alert. It'll be added to my just my current alerts, and then I can just check in and see what I have. So I can also click Create Alert and go to Portfolio or Watch List. And then I can select any of these, but I'll go to my dividend portfolio. And now I can set alerts on all of the stocks in my dividend portfolio. So it's not the portfolio as a whole, but it's on each individual stock. And so as such, there's not quite as many fields because there aren't the hard values, but there are percentage increases. So for example, if I want to be alerted if any of my stocks in my dividend portfolio have a rapid price depreciation, I can just select to get an alert when the price decreases, say 5% from the last close. Or if I want to know if any of them are falling behind their industry, I can set an alert to see if any of them decrease by, I don't know, 10% over the course of 2 weeks. And I could also compare it against the sector or the S&P 500. But this is kind of a nice way to just be able to monitor your portfolio without having to log into Stock Rover every day or several times a day. So if I click Save Alert, I can see now that those alerts are added as well, and they're currently set as email alerts. So I'll just click Close. So the next reason to sell I'll talk about is for valuation. So some investors choose to sell when the valuation is too high, or specifically if you bought the stock because it had a low valuation, but now you think it's overvalued, you might want to sell. And there's a couple different ways of looking at that in Stock Rover. So the first one I'm going to talk about is just this 5-year price to earnings range. And so this means exactly what it sounds like. There's the lower range for the past 5 years and the upper range, and then this little blue marker that shows where you are. And if you mouse over, you can get some more data. So right now, Aetna's at a 14.3 price to earnings, which is pretty close to its 5-year historical range of 14.9. So it's kind of on the upper limit. And actually, you can sort by this column as well, just by clicking the column header. And so you can just get a really quick and easy view of how the valuations are for all of the stocks in your portfolio. You can also chart the valuation metrics to see how they've been doing more so than just the range. So if I want, I can go down to the chart and select fundamentals, and I can select price to earnings or price to sales. Basic users have just, I believe, these 6 fundamentals, but premium users have over 100 that you can search for. But I'll just use the PE, and I'll just take it back to 5 years. And so we can kind of see not only what the range was, but also how it's moved, and has it been elevated for quite a while or what. So that's just a little bit more data. And then also there's always the summary tab valuation component here where it shows the price to earnings, price to book, and price to sales, and price to free cash flow for the stock, and then for its industry as well. So you can kind of see not only how it's doing against itself, but also how it's doing against its industry. Now I'll just talk a bit about technicals. So I did an entire webinar just on technicals a couple of months ago, so there's really a lot to say on the matter. So I'm not going to go over all of it, but I'll just point out 3 different ways that you can use them in the chart, in the table, and with screening. And if you're not familiar, they just basically indicate price momentum, so try to predict price movements. And many investors use technicals in conjunction with fundamental analysis. So they'll have a stock that they're waiting to sell, and then they'll wait till the technicals look good and then execute the trade. So the first way that you can look at technicals that I'll go over is in the chart. So if I just click the technicals menu, you can see that there's these 8 technicals that we support, and I'll just add in the relative strength index. And these are best used on a shorter time period, so I'll go down to 1 year. And here I'm looking at Aetna, and I can see it's kind of had this rally, but it seems like it might be coming around. And if I look down at the RSI, it's kind of elevated. Generally, the idea is that if it's above 70, it's time to sell. So if I had been planning on selling Aetna, now might be a good time to do that because it looks like it might head downwards again. You can also look at technicals in the table. So I'm going to create an entire view just with technicals by right-clicking any of the tabs and selecting Create. and I'm just going to call it Technicals. And then I'm going to go to the Technicals Indicators folder, and then I'm just going to select all of them and add. Click Save, and then that'll be added at the very end, and this will show all the technicals for all of the stocks in my portfolio. And you can, of course, also sort all of these. So, for example, I wanted to sort by the Bollinger %20, so that's the 20-day period Bollinger Band. I can see the stocks that are closer to the bottom band or closer to the top. So, for example, I'll select VFC, so that has a Bollinger %20 value of 94.7. If I go to Technicals and then I add in the Bollinger Band, you can see that that means that it's kind of towards its upper limit, and often when that happens, the stock has a correction downwards. So that's kind of how you can use the technical values in the table. You can also screen on technicals. You can see instead of having to look at all the values, you can see only the stocks in your portfolio that are hitting certain indicators at a certain value. So I made this very simple technical screener called Technicals Time to Sell. And it looks for when the Bollinger %20 is above 90 and when the relative strength index is above 65. So I just chose these, but you could choose any selection or combination of the ones you want. So I'm going to keep the dividend portfolio in the table, but then I'm going to right-click the screener and select Screen Current Table. And then that'll apply the technicals to the table. And it looks like the only one that passed both of those is this VFC. And so this was also not yellow, so it's not one of the ones that the analysts didn't like. And so I might not be thinking of selling this at all. But if one of the yellow ones came up that I was thinking of selling, it would be another indication that maybe now would be the time to do it. So once you've screened the table, that means that there's been these filters added. You can see up at the top, and they'll stay there until you remove them. So I'm going to go to Filter and select Clear Filters All. So that's all I'm going to talk about with technicals. Now I'll look at deteriorating fundamentals. So if you sense a weakening in the core business fundamentals, that could be a reason to think about selling. So, and often the sales and profit margins and cash flow and other key operating fundamentals start to deteriorate before the stock price starts to decline. So you can kind of get a head start on it. So first I'll just look at the table. I mean, you can look at any tab or create your own view tab with your favorite metrics, but I'll just go to the profitability tab for now. And here you can see that there's return on invested capital, some margins, return on assets, return on equity, the sustainable growth rate, the 5-year price to sales range, and the gross margin. And these are just the ones that happen to be in this profitability view, and you of course can sort by any of them. And you can also expand the rows to see the historical values, which I find really useful. So if we use Aetna again, I can expand it and see that the margins going from the bottom up are actually falling. So that's kind of a troubling sign. I can also see these in the table if I'd like. So let me just clear out the technicals that were there. And if I have the stock selected, I can go to Fundamentals again, and if I just want to search for net, and I can select the net margin and go back maybe 10 years to see. And here you can see that the net margin does look like it's falling. So if you don't want to just expand the row, you can also just chart fundamentals down here and kind of get a little bit more information more quickly. You can also chart several fundamentals at once, so and see how they move together. So I'm going to take a slight detour with my dividend portfolio to show an example that I've been using for a blog post that I've been writing with Amazon. So I'm going to put in Amazon in the chart, and I'm going to go to the fundamentals, and I'm going to chart a metric package, which means that it will chart several fundamentals at once, and this is a premium feature. But I'm going to look at the net margin, sales, and free cash flow as a % of sales. So if you're looking at Amazon and you were just looking at the sales, it would look pretty good because the sales are increasing at quite a good clip. But when you look at it in context with the net margin and the free cash flow as a % of sales, you can see that actually as it's been growing its sales, it's been reducing its net margin. So even though it's selling more and more, less money is actually making it to the bottom line, or that can be turned into profits. And likewise, it's also generating less free cash flow as a % of sales as well. So these are something, seeing these together I think is more powerful than just looking at them one at a time. Oh, I also wanted to mention how you can filter in the table as well. So if I go to my growth tab, which is over here, This will load all the stocks with all their growth metrics. And I can also filter here if I want to just see stocks that, say, have a poor sales growth. So here's the sales 1 year change. I can right-click, select filter, and then say I only want to see the ones with poor sales growths, maybe below 3%. I can enter in that. And then I can see that 2 of my stocks have kind of this anemic or negative sales growth. So filtering can also help you only look at certain, or kind of slice your portfolio in certain ways so you see only the aspect that you want to see. All right, I'll undo this filter. And for fundamentals, you can obviously also check the financial statements. So if you go to the Detail tab, and I'm going to collapse the Analyst estimates and bring it a lot wider, you can see that we have these segments for income summary, balance sheet summary, and cash flow. And when you click them, it'll expand below with the yearly or quarterly income statement. And so that if you already are kind of familiar with the financial statements for this company, it could be a really useful way to just quickly get a snapshot. But if you're not as familiar, you can also click the full statement link, and that'll take you to the full statement in Morningstar there. But obviously the financial statements is really the meat of the business and where you can really tell if something's going awry. All right, next I'm going to talk about the opportunity cost. So basically comparing a stock to its peers. Is there something that I could sell my current stock for and replace it with something that's similar but better? And for that, I'm going to use Starbucks as my is my example. And I'm going to clear out some of this stuff. So I'm going to look at the past 5 years, and it looks pretty good from this view, although there's been a lot of volatility in the past year. And if I go down to the 1 year, you can see that it's actually lost a little bit of ground. And I can see how it's done against its industry by going to benchmarks and selecting the industry. And here I can see that it's actually underperformed its industry by quite a bit in the past year. And then if I add in a sector, I can see that it's also underperformed its sector. And this is kind of like the worst case because the industry is doing better than the sector, but Starbucks has been doing worse than both of them. So it seems like I could definitely be doing better in the restaurants industry if I just swap out Starbucks for something that looks a little healthier. So in order to find a replacement stock, I'm going to go to the Peers tab. And this will show all of the stocks in the same industry and sector as the selected stock, which is Starbucks. And you can see it's been highlighted blue there. So I'm just going to make this a little bit wider. And if you're not familiar with the Peers tab, it's really quite a powerful feature. It acts a lot like the table, so you can modify the columns, add columns, or sort and filter by all these to kind of pare down the stocks to only what you want. So for this, Starbucks is massive, as you can see. So if I want to replace it with something that's also large cap, I can just put in a filter to get rid of the small guy. So I'll put in bigger than 8 billion. And that pares it down to this nice small list of big stocks that could replace Starbucks. So then I'm going to go over to the return 1 year and sort by that and see that Starbucks is at the very bottom. So it's definitely room for improvement in this segment. And then at the top, there's BKW, which is actually Burger King. And you can see it's had a 1 year return of 64.3 with a 3-month return of 18.6 above the industry. It is a little more expensive, so it has a PE industry decile of 6. So that means that, and actually if you want to just right-click and hit explain, that'll explain whatever column you're looking at, but basically looks at the PE of all the companies in the industry, and companies that are cheaper are lower. So 6 is a little more expensive than Starbucks 5, but it has much better return, and it also has a slightly lower beta. So for this, if I'm interested, I can just click this little green plus, and that'll add Burger King to the table, and then I can kind of see it in the context of the table without actually having to add it to my portfolio. So I can see how it measures up and if it would kind of fit nicely. So next I'm going to talk about rebalancing. I'm going to go back to the Summary tab in the Insight panel and just scroll down. And whenever you have a portfolio selected in the table, it will always show the portfolio allocation here at the bottom of the Summary tab. And you can see here that this portfolio is pretty unbalanced, so this could be a reason that I would want to sell some stocks just to get it. So these 5 segments are kind of more aligned. So this is where you can see each of the sectors, and actually you can click down and, for example, I can look at healthcare and see within healthcare it's fairly evenly mixed, but healthcare itself is taking up a much too large chunk of my portfolio, or more than I'd like. So this is where you can kind of see the allocation, but if you want to model hypothetical trades to see how you could best get it back into balance, you can use our portfolio modeling. So to do that, you can right-click the portfolio in the navigation panel and select Model from the drop-down menu. And that'll bring up the portfolio modeling facility. And and I forgot to reset it from when I was practicing. Let me just reset that. And I'm gonna I've kept it grouped by sector because I like to, especially when I'm looking at rebalancing, I like to see all of the sectors together. So to do that, just right-click and group by and then select sector. But here, basically, it'll show my current portfolio, and then I can put in model trades or model positions, and it will tell me some data about how that would affect my return versus the S&P 500 or risk-adjusted return, for example, as well as some of the valuations or earnings growth and the allocation. So it's really useful because you can kind of fiddle around with trades to get it exactly how you like, and then decide and then execute those trades. There's not the trial and error doesn't actually affect your real portfolio. So first, I guess I'll just show you that if I did want to swap Starbucks and Burger King, I could do that by going to Starbucks here. And I'm just going to put the model quantity. Its defaults as the same as the current quantity, but I'm just going to set it to 0. And when I do that, it's going to be colored red just because that means that it was a reduction in shares. And it's also added this cash position up at the top. And I can also add in a hypothetical trade by clicking the Add Ticker. And I can look at Burger King. And I'm going to add in, I think, about 150 shares, which is, I think, roughly the same amount of money that it was to sell the Starbucks. When I do that, you can see that it's green because it's I've added shares. And then I can go over and look at the analytics and see, this is if as if I had performed this trade a year ago, how would it have done? So it would have affected my portfolio positively. And then it also can show me what it would do to just the general makeup of my portfolio. So price earnings looks like it'd be the same. I would have, it's not a big trade, so most of these are the same, but I'll add in another one. And if I go down to the allocation, and now I can look at the allocation to see if, well, there's healthcare is way over what I want it to be. So I can go over to my healthcare sector down here and say I want to reduce WellPoint by 250, as well as the United Health Group. And then I can choose to maybe sell half of my Aetna shares. When I do that, you can see over here that the model portfolio allocation for healthcare is now at 22.2 instead of 32.4, so it's much more balanced and much more closer to what I'd like it to be. So here you can kind of fiddle around with the different values, or add in tickers, sell tickers, and kind of create your sort of dream portfolio and find out exactly which trades that would be. And then you can export these trades and just execute them out of your broker, and that's a really good way of making sure that you've balanced your portfolio in the way that you like. Now I'll go over diversification. So basically, if your stocks are highly correlated, it leaves you vulnerable to diversification risks. So essentially, if one stock goes downward, they all go. And that's not good for the health of the portfolio. So I'm going to go to the portfolio reporting in the top left, and this is a premium feature. So when I click that, it'll open the portfolio reporting facility. I've selected just the dividend portfolio. I'm looking at a 1-year time period, and I'm going to go to correlation. And this will show all of the stocks in my dividend portfolio, as well as the dividend portfolio itself, as both rows and columns. And then their correlation is in this. And basically, if it's gray, that means there's low correlation, which is good. And then the redder means the more correlated, which is worse. And then purple is negatively correlated. So I can just take a look at it, or I can filter to just see which stocks are kind of the culprits. So if I click the filter icon, and I can look at stocks that just have a correlation above, say, 0.85, and that'll only show me the ones with high correlation. So then I can go along my dividend portfolio row and see which stocks it is that, or which stocks are the ones that are highly correlated. So it looks like Aetna has 0.95, so that was one that I was thinking of selling, and it has pretty high correlation, so I could I could potentially sell it for something that has less. I've also added in this BKW from before, and that's so that's the Burger King, and so I can see how that correlates to the portfolio as well. So it looks like even though that stock looked pretty good in other aspects, it still has a pretty high correlation of 0.89. So I might want to go back to the drawing board and find a replacement for Starbucks that has a little less correlation. But this is a really useful tool for finding stocks that aren't correlated. And you can also add in sectors as well, so you can find whole sectors that might be not correlated with your portfolio, and that can kind of help you find which where you might want to look for new stocks. Lastly, I'll just quickly go over the News tab. So if there's a change in management or the competition that it's facing, or the business or regulatory environment that affect the business, you could probably see all of that in the News tab. And if you go to Newsfeed and if you've selected ticker news for Benzinga, Google, or Yahoo, that means that you can choose ticker news or market news. And so this is where you can just get whatever headlines are the most recent about the stock. So if there is some sort of big change, it will likely show up here. And you can also, of course, find this sort of information in the filings. So if I go to the Summary tab and go to the filing section, so you can see there's annual reports and quarterly reports. And if I click on that, it'll just bring up the available annual reports, and I can click that, and then I'm in Edgar, and then it's just one more click directly into the 10K or the 10Q. So that's a way easier process than trying to use Edgar on its own. So this is where all sorts of anything that affects the core business will be reported here. So the last section I'm going to go over is just learning from your mistakes and kind of how you can use Stock Rover to improve your trading. So first I'll go to the portfolio reporting again. So this is that premium feature. And this time I'm going to use the holdings detail. So this shows all of the holdings for the selected portfolio in the time period. So this is 1 year. And so this will include stocks that you've sold because they did contribute to the portfolio over this time period. So it gives you a totally a complete picture of the portfolio over the past year. And you can sort by the columns here. So if I want to sort by total return, I can kind of see, well, what stocks do I kind of think are doing well, and which ones are actually kind of contributing the most. And so here you can see Aetna, for example, has contributed a lot, whereas Starbucks, which I was pretty sure I wanted to sell, has contributed basically nothing. So that just kind of can help me affirm what I might feel about my portfolio. You can actually see hard numbers about what they're all doing. You can also, if you want to kind of if you weren't sure about a trade, but you wanted to see what it would be like if you didn't make it, you can actually copy the portfolio that didn't have the trades and then compare it against the one that did and see how they do over time. And then by analyzing how they do, you can maybe learn for how to trade better in the future. So to copy a portfolio, you can right-click and select Copy from the drop-down menu. And then you'll be prompted to give it a name. So I'll just call it Dividend Portfolio Before Trades. And you can either copy the current holdings, but I'm going to copy the entire history of all the trades. Click Save. And then now if I go and execute some trades in the dividend portfolio, I can see how if they were actually smart decisions by comparing it against this copy of what it was like before. And so that can be really useful, and you can make a comparison of kind of what if, which is a really cool feature, and I think is not that easy to do in other platforms. And then finally, I'm going to talk about the Notes facility, which is also a premium feature. It's the last tab of the Insight panel on the right. So if you click Notes, it'll automatically search by whatever stock is selected, but you can just exit out of that. And here you can add in kind of your investment thoughts, and then these are also timestamped, so you can see the progression of your thoughts over time. So if you click Add Note, it'll automatically pull as a title the name and ticker of whatever stock is selected, and then you can just say maybe you're thinking of buying it, or when you do buy it, you can say why you're buying it, or kind of even come up with the rule that you have for selling it. And then as you hold it in your portfolio over time, you can add more notes, and then you can kind of just search for only those notes and see what your thoughts were over time. So this can be a really useful feature because you can basically trace your thoughts over time as opposed to just knowing you did something but forgetting why. So this is also being able to kind of see the research process in your head over time is really valuable for kind of learning and getting better over time. So that's it for the demo right now. If you have any questions, please type them in as we're going to go over those now. And just a reminder, again, we are recording this session, so I'll send it out to you when we can. But with that, I think I'll have Howard come on the line and we'll just go through the questions that have come in. Howard? He may, let's see.
Yeah, here I said I might unmute myself. Thank you.
Okay.
That was, can you hear me?
Yes, I can hear you.
Great. Here I am. Great job. I really enjoyed that. It was really comprehensive. So with the webinar, there was a little black stripe in the upper right-hand corner that we're going to look into that. I think that's just an issue with GoToWebinar.
Yeah, we've had issues with the way that the screen renders. Sometimes there's black flickering, so I'm sorry about that. I hope it didn't interfere too much.
Yeah, fortunately, I think it didn't. So, I probably the best with the questions if you read them, and then I'll just do my best to answer them.
Sure. First, it's just a comment about great topic, and I hope you are keeping warm up there. Up there being Boston, where we're based. Yes, it's pretty cold. But one user wrote in that they'd lost sound, but it came back. Again, GoToMeeting just kind of does these things sometimes, so that's frustrating. And let's see. Okay, so the next question, how timely are the EPS, et cetera, data updates from when the company first reports?
That's a really good question. As far as the financial statements, the quarterly financial statements, the company will make an announcement, and then what will happen is they'll file their GAAP statements with Edgar, which generally, it varies by company, but that's generally 2 to 4 weeks after the announcement, and we get them 1 day after they're filed. So the delay really is dependent on how the difference between a company not when they announce their earnings and when they actually file with the government. But once they do file with the government, we get them, as I say, immediately. So I think that you can expect 2 to 4 weeks on average would be the delay between sort of announced earnings from a company and the financials being available.
All right. The next question is regarding finding PEs. What if the earnings are negative or zero?
Well, negative or zero P's, I mean, you would filter for that. I think they just get a dash. So
yeah,
because,
they do.
Yeah, so you typically, when you filter for PEs, if you wanted to avoid companies with negative P's, which normally you'd put in a lower bound and an upper bound on a PE, and that would effectively get rid of all the negative PEs.
Yeah, here's an example. Just with Amazon had negative earnings, so it has just a dash for the price of earnings. It's not filled in. Some more complaints about the GoToMeeting. I am sorry that it was so buggy. There's a question. Oh, someone is saying that they don't see the dividend portfolio in the library. That's because I haven't added it, but I can add it if you'd like. It's not. I should warn that it's not really. It hasn't really been kept up. It's mainly just a dummy portfolio we use for webinars, so I don't know if you really would want to have it in your account, but I can add it if people are interested. So what does a yellow horizontal band mean in the top table? I guess I can
assume that's referring to the coloring.
Yeah, so these stocks have been colored. So if you right-click a stock, you can go color, and they've been colored yellow, and that's just because of an example I did earlier. These were the stocks that had negative revisions for their EPS for next year, so I just kind of wanted to mentally flag them. So you can color by all of these, and then you can group by color. So it's a really useful feature to just color code stocks, but I can just uncolor them by clicking the little palette icon as a shortcut. Let's see. So one person enjoyed the webinar but had to leave, and again, it will be recorded. So that one question, I believe prices are in their native currencies. Do you recommend separating U.S. and Canadian stocks into their own portfolios to eliminate currency issues when doing analysis?
I think actually the Canadian stocks are converted to U.S. dollars. I'll verify that, but I believe that everything, for example, stocks that trade on the Toronto exchanges, everything in Stock Rover is priced in U.S. dollars. But I'll verify that and get back to you on that. But you should not have to separate them because it should be common currency.
All right. The next question is, when will the next webinar be? And that I can tell you
Okay.
it's on,
Yeah.
it's on
Yeah.
Thursday, December 11th at 1 p.m. Eastern Time, and that's the Stock Rover 101, so that's our intro webinar. But in my follow-up email that I'll send to everyone, I'll also send a link to the webinar page where you can always see our upcoming webinars. All right, next question, how often are the earnings consensus, we kind of went over this already, but the earnings consensus updated in the system?
Oh, the consensus is a little different than, well, maybe I missed, the first question I answered is regarding the actual financials a company publishes after a quarter's over. The consensus is, which is based on what analysts think a company is going to do. Those are updated daily. Every night we get a feed that indicates any changes that analysts have made, so those are current. So if an analyst has made kind of a change in their point of view of towards a company, you'll have it the next day.
All right. How often are all the metrics updated? I use Stock Rover extensively for my stock research, but I've noticed discrepancies with other sources.
Well, given how many financial sources there are, there's definitely going to be discrepancies. Different companies use different feeds. There's different quality of feeds. We use Morningstar as our primary provider. Sometimes their data we've noticed isn't right. We sometimes find it. Sometimes our users point it out. Generally, their feeds are quite good. But in the financial world, unfortunately, the data feeds are not uniform and reliable. One problem is that companies often restate financials and then refile, which then results in kind of a staggered updating of some providers don't get these, some get them pretty quickly, some get them late, so there can be differences there. It's the nature of the beast. I'd like to think our data is quite good, but it's not perfect, and I think that's true of anybody that's providing data.
All right. How can I directly see all of my notes together without entering individual symbols? And I can just take that one. So when you select a stock, it automatically will search for it, but then you can just click the X, clear the search, and that'll bring up all of the notes there. Let's see, the next question, can you show us again how to get the portfolio allocation chart on the right to reflect the entire portfolio? So that's just if you have a stock selected in the portfolio, if you have a portfolio selected in the table. So if it's ever selected on the left, then it's just all the way at the bottom. It's kind of an added section when there's a portfolio selected.
Yeah, so the key is to be selected at the portfolio level rather than the stock level. As soon as you select at the stock level, you'll lose that.
Actually, no, we changed that. That used to be the way it works. Yes, I know, because it makes more sense this way. Yeah, so now it used to be that you would have to be in My Portfolios and have them all listed, but now we've changed it. So even if you're in the portfolio level and it's listing all of my tickers, you can still see that. It's just you have to scroll all the way down to find it, but it should be there. So I suppose the technicals time to sell screener will be added to the library. Yeah, I can. It's very simple, and again, it's not. I'll put disclaimers, but they're really just to demo how you can use the technicals. But I can add it to the library, and I'll email you when it's been added. Does the total return number shown at the end include the dividends? I didn't see the column.
Yes, total returns are always, when we do total return, we always include dividends, so you're comparing apples to apples for stocks that have different dividend profiles. So, yeah, we just do that automatically.
All right. How goes the brokerage download sync project? Timing of rollout?
Yeah, we get asked this all the time because it's a really critical feature that we want to add to the product, and it's a two-stage process for us. The first stage is to really be able to support transactions directly. The current portfolio scheme doesn't do that. It just stores kind of the end of day positions for the portfolio over time, which isn't quite transactions. So we're going to go to a true transaction-based system, and that's scheduled for the early part of 2015, where we actually have 2 developers working on it now, and they've been working on it for quite a while. It's kind of complicated to do it right, but I think it's going to be quite nice for users. It'll be very easy to keep portfolios updated. Once that's done, we have the foundation for being able to import to brokerage, and then the next step would be to look at, basically automating the feed so the user doesn't have to be involved in a CSV export and import. So that would follow after that. So I think a reasonable expectation would be, depending on the complexity of the problem, early to mid next year.
All right. One question again about the GoToWebinar software. They said that, is it me or is it difficult to expand the webinar window on high resolution monitors? It stays the same size, but the gray area around it gets bigger.
Yeah, that's the way it, that's
Yeah,
the
I'd
way
say
it
it's definitely not
works.
you. That's just the way the GoToMeeting is, unfortunately.
Yeah.
Again, it's not ideal, but it's the best that we've found for doing these. One request, could you show that part where you demoed how the stock would have performed in the past? Yeah, and I can take that. So that was when I did portfolio modeling, I believe, is what you're talking about. So right-click the portfolio and select Model. So it's the fourth item down, and then that brings up the portfolio modeling window. And then you can like add in a ticker and see how. I mean, I have a couple different portfolio trades going on, hypothetical trades, but essentially you can add in a ticker and then select a time period and see, had you done that trade a year ago, what your portfolio would have looked like and what the difference would have been. So that's portfolio modeling. So then another just a bit about the Canadian dollar conversion to US. I guess if
Yeah, we'll definitely update and post that. We'll actually post that in the email we send to people so that everybody's aware of it. But
okay. So one question, I have my portfolios separated by brokerage account. Is there a way to view them combined for analysis purposes?
yes, definitely. I mean, if you go one level higher, I believe you can combine them. Right?
Yeah, you can do that, and then also in portfolio reporting, if you click that. So this is the premium feature. I'm not sure if you're a premium user, but this is where you can select as many as you'd like, and then see, different metrics on it as well. But yeah, so you can do that, or just select my portfolios as a top level on the left. So one person just had a bid for stay with Morningstar data. They like that data, so that's good.
Yeah, we agree. I mean, we spent a lot of time looking at data feeds and felt that although Morningstar is not perfect, they were, in our view, the best of the breed, which is why we selected them, and we do intend to continue with them.
All right. Next question, is there a way to merge various broker holdings after downloaded into one portfolio? Yeah, we've had some, I think, in short, there's not an easy way to do that right now, though we can check with our chief developer, but we can get back to you.
Yeah, I think that's something that's kind of on the list to improve in the future, but given that we're kind of going to be doing a whole new way of doing portfolios, I think we're going to address that as part of that release.
Yeah, one thing you can do is if you have different portfolios, you can right-click the top level, My Portfolios, and select Show All Stocks. So that'll show them all in the table, though they won't all be in one portfolio, but you can at least kind of see them all listed together. So that would be one way to do it for now. But as far as combining them so they're in one portfolio, I think that there's not an easy way to do that now. I noticed some past date data. Do you use any backtesting methods for technicals?
Well, the short answer is no. I mean, technicals are computed based on the current price and then whatever the math is going backwards. So, the Bollinger 20 will look at the last 20 days, for example, and different technicals look at different past periods. When we screen using technicals, it's always using the current date going kind of backwards from that. In general, we've been requested to put backtesting in screening. It is something that's on our development list for next year, and when we do that, we would expect that backtesting would be available for technicals and fundamental screening, which a lot of people have asked for.
All right. The next is just a comment saying that you can expand or zoom in on a recording. So I may actually do that for the version we post on the website. So it's not just the whole screen, but I can only zoom in on the part that I'm working at. So thank you for mentioning that. And the last question we have right now is, does the top left webinar view zoom feature answer the screen expansion question? I'm not sure if I understand that one, but I think that sounds like another GoToMeeting question. Yeah. I'm so sorry there were so many issues with
we have a little homework to do with GoToMeeting after this webinar. We're a little disappointed that the presentation had the right side had some black area, which was a little distracting, and so did the app. So we're going to try to figure that out.
One more question came in. Does the total return include buybacks?
Well, not really. I mean, even if a company buys their own stock, that will affect things like EPS, and it might affect the share price if investors like that. But if a company buys its stock, it doesn't really have any impact on total return, except the indirect way if investors like the buyback and then bid up the stock.
Okay, great. And then just a compliment, great product and seminar from a premium customer. So thank you very much. We love hearing that. So that it looks like that's all that's come in, but I will be sending a follow-up email with the webinar schedule and with the recording when it's up. That'll probably be within the next couple days, and you can respond to me or email feedback@stockrover.com. So thank you so much for taking the time to learn about Stock Rover, and I hope everyone has a good day. Bye.